If you're here, that means that you have questions about ESG investing, economic, societal, and governance investing. And so congratulations. I guess that means that you're interested in investing for the future, but also you have a conscience. So kudos to you. So let's break it down a little bit, kind of what's involved here, how this all works. So basically ESG investing has a series of criteria, like I mentioned earlier, from environmental, societal, and governance metrics. And so what this means, environmental are they planting trees, what are their carbon emissions, their waste management, things like that. Societal, how do they treat their employees? Do they have a diverse employment base? Do they provide childcare, healthcare, things like that? Governance, do they have a diverse board? Do they have oversights, or is this kind of a dual class shareholder situation where basically, you have a dictator at the top running the whole company? So in theory, it's kind of a really cool idea. There's been a lot of back and forth about whether or not it actually winds up yielding higher returns or not. It's a relatively new direction in kind of investing. So the data isn't really in yet. But the theory is that through these initiatives, you're going to wind up having more long-term sustained returns or high returns than you would had you not been operating your company or investing in these initiatives for the future. In the short term, it seems like maybe that's less of an option, or less of a viable perspective. Some of the things to watch out for here. Basically, somebody has to rate these companies to give them an ESG score. It's a few different firms out there that do this. There is some opacity about how they wind up rating these companies. You may have heard things like ExxonMobil has a higher ESG rating than Tesla Autos does, which seems counterintuitive, but I guess it's rated on, in this argument is that it's rated on a sliding scale. So basically ExxonMobil is a cleaner energy company than Tesla is a car company, as I guess the argument for that. It feels a little spurious for me, especially if the thing that you're most interested in ESG investing is the environmental component of it. So that's a real rub there. You got to figure out like how that works, and again, this is a neat idea, but I think it never replaces your responsibility to do your research and to figure out what it is that is important to you and whether or not the investments that you're making line up with them. So there are some rubs there, but I guess the main takeaways here, it's a really cool perspective. I love the idea of thinking about, investing in companies that are more, geared towards thinking about the long term. Some things to really make sure that you understand, why is this company rated higher as an ESG space? Does that company align with your values? And is that company likely to make you, long-term returns? I mean, at the end of the day, ESG investing is investing. And so as an investment, you need to, ensure that you're returning the most capital for, your investment that you possibly can. Also, if this is something that's really important to you, another way of approaching it, instead of investing necessarily in this way, you could also decide where you want to put your dollars when you're out here consuming things. If there's a company that has an ethos or is in a space that you don't really like, you know what? Don't buy their product. If environmental sustainability is a really important component for you, buy less gas, by driving less and walking more places. For me, that feels like a way of really making a difference and kind of using your dollars as a vote. But yeah, so that's kind of the short and skinny of ESG investing. It's a really neat idea. It's kind of early days. We'll see how it goes, but I think it'd be really cool if this winds up being one of those things where it turns out in the long term, companies that focus on this wind up having higher returns. But again, it's really kind of early to understand this.